Welcome back, everybody, to our Prime Capital Financial Market Breakdown. I'm Tara McBride, Chief Marketing Officer with Prime Capital Financial, and you may recognize that we're coming to you in a slightly different format today. I am still joined by my colleagues, Clayton Allison and Will McGuff, but we happen to all be together in our Kansas City office. And so we thought, why not have more of a conversation today about this week's topic. And so coming at you with a slightly different format. But today's topic is meme stocks. So if you recall the GameStop craze that happened where the Reddit users kind of helped the GameStop stock surge, that situation is coming to fruition again. Reddit threads are boosting some stocks from Kohl's to Krispy Kreme. And so it has some of the experts now whispering frothy. One of my favorite words in investments. So here to break everything down, as I mentioned, is Clayton and Will. And we're going to have a little bit more of a conversation today than we normally do, but we still have some really great questions for them. But in the meantime, don't forget to scan the QR code on your screen or click the link in the show notes for your free resource that is all about meme stocks and what they mean for you as an investor. So let's get into it, guys. So good to see you in person. I'm making them sit on the same side, sort of like, you know, when you're riding in a truck with your sweetheart. But they're great pals, so they don't mind getting a little close. So, Will, let's get into it. Some analysts suggest the resurgence of meme stocks is a sign that the market is entering a frothy phase. In your view, what defines a frothy market, and how does this one compare to previous cycles of exuberance?
Right. Thanks for having us. And the new format's awesome. It's a little frothy right here between us. So close.
A little close.
So frothy can mean a lot of things to a lot of different people. But with regards to the market, to me, it's when a fundamental value gets disconnected from a price. So stocks go up way more than what their actual value is. Frothy markets have existed for a long time, going back to the 17th century tulip mania. So that wasn't even stocks. That was tulips. So tulips can be frothy, even as beautiful as they are. And we all recall the 99.com. You had etoys.com, pets.com, with extreme valuations that led to that bubble. So right now it's just speculation that's driving prices higher, which is all sentiment. So markets can be frothy, and really it doesn't matter the time period or the situation. Speculation leads to froth.
Yeah.
So you're telling me that my Beanie Babies aren't worth anything now?
Baby babies are worthless.
Crap. No, I remember the pets.com ads. You know, they were such great ads, and it actually makes me think of like Triumph the dog, which is another really great puppet for anybody who remembers those. All right, Clayton, shifting gears. In the context of elevated interest rates, global uncertainty, and narrow market leadership, how should investors interpret speculative surges like these? Are they canaries in the coal mine or just noise?
Yeah, I mean, I think that's kind of hard to break down to an extent. There's a lot going on in the market right now, like you perfectly said. Now, on these meme stocks, when they speculatively surge like that, it's like Will said, it's more market sentiment and speculation more than anything. And you're really hitching your wagon to these companies that have largely been left to die more times than not. And like you said, you mentioned Reddit. I'd love to know what your username is on there and see all the stuff that you post. But as you can see, it's
deep dark.
Yeah. Keep that hidden. You should keep that hidden.
Nobody can find me.
Yeah. You see more times than not, they're getting online, coordinating these for these kind of dying business models, and then they surge. And more times than not, somebody's left holding a bag, so to speak. Mm-hmm. So when you're trying to figure out, okay, is that a canary in the coal mine? It kind of is dislocated from the broader market as a whole, I would say. I don't really want to say, hey, it's a canary in a coal mine. Yeah. Because then that kind of starts setting off red flags and things of that nature for the broader economy and the broader markets, when really these have to be kind of viewed more in isolation, because they're not trading like your typical companies that are really driving the overall economy. It's more people getting on there and gambling more times than not.
And you also mentioned what's different this time than other times.
Yeah.
It's the dead business models.
Yeah.
So these Reddit users are finding named businesses we're all well aware of and ramping the prices higher after years of them being in the basement as far as their earnings and how they're profitable as a company.
Yeah. It's almost like Reddit users are being like Spirit Halloween, coming in like, hey, you have an open storefront?
Except Spirit Halloween is profitable. So they got a great business model.
They're doing pretty well. Yeah. All right. So, Will, coming back to you, compared to 2021's GameStop mania, how has institutional participation changed? Are hedge funds truly adapting to or even capitalizing on meme momentum?
Yeah. So I think this is a buzzword when you mentioned hedge funds. Any legit hedge fund that manages sizable assets is going to have a hard time getting allocations to these meme stocks without exacerbating the move even more. So you may hear there are some hedge funds, some institutions playing in this space, but they're probably smaller in scale and not your name brand managers. So again, it's buzzword to me. This is a retail trade where retail investors are ganging up and driving stock prices higher in certain names.
Well, and exactly what he said. If you're a hedge fund, you're moving institutional sized money. You can't allocate that amount of capital that quickly. Some of these moves happen in the span of like 2 hours.
Yeah.
So like it's much easier for me to get on my Reddit thread first thing in the morning, see, oh, everybody's buying into Kohl's. Well, I can hop on from my phone and buy some options and everything like that. But if I'm a hedge fund, I can't allocate like $50 million or whatever amount of money. I'm just throwing one out to Kohl's at the open and then also exit that and make a profit off that. You know, maybe some can, but like Will said, they're probably smaller, more boutique shops rather than like the Citadels of the world and things like that.
Gotcha. It feels a little like, and this is a little off script, just go with me, guys. So it feels a little like eat the rich, you know, come after the, you know, the 99% or whatever, coming after the 1%. I mean, do you feel like it's just kind of like seeing the masses, seeing if they can kind of stick it to Wall Street?
I mean, that's kind of what the sentiment was when the whole GameStop thing happened back then. They saw that GameStop got shorted a whole lot. They wanted to get in on the money and things of that nature. And now that's kind of like the playbook. They look for companies that are, like Will mentioned, named companies that you would recognize. Kohl's, Krispy Kreme, still GameStop. People still go to the GameStop well every now and then. And they're looking for all of these companies that have been shorted by Wall Street more times than not. And they're trying to force them to close these shorts and pump the price back up and pretty much pump and dump this stock and everything like that. And that was kind of the whole theme back when the GameStop thing happened, which was eat the rich, like you said.
Well, this is how trends happen. You get a mass amount of people and money behind one idea and trends percolate. This is just happening in a bunch of stocks that are essentially worthless on Reddit boards, but it's the same thing with interest rates, markets. In a much more trillion-dollar economy, those same trends happen too. So I like to think of things simplistically, follow capital. And wherever capital is going is where prices are going to be driven. And again, this is just on a much smaller scale with retail traders and meme stocks, not capital markets.
Yeah. Interesting. So retail investors, Clayton, are clearly a powerful force as we're talking about, but what are the real risks of chasing meme stocks at this stage? And how do you evaluate names like Krispy Kreme or Kohl's that are caught up in the hype?
All right, so two-part question.
Yes, 2 parts. I can repeat anything that you need me to.
Can you repeat the first part?
Yeah.
I'm sure I want to answer that one.
What are the real risks of chasing meme stocks at this stage?
The real risk of chasing that is you're going to be the one that's been left
holding the bag.
Holding the eggs of liquidity. So like if I didn't get on at 7 o'clock this morning and see that the message boards are buzzing with the new name of the week, and I then get to the markets and Kohl's, let's pretend, or Krispy Kreme is up 200%, but I think it's going to go up more. I'll buy in. Well, I'm just somebody's bag holder at that point because they're going to sell out of it. You made 100%. I just lost 100% because I had to take your shares to get into that.
Yeah.
You're essentially asking to time something that is unpredictable more times than not. So that's kind of the risk if you're going to go chasing these things, like unless you're the one coordinating this pump and dump scheme. Don't do that. That's bad. Don't do that. But that's kind of one of the risks. You're going to lose money potentially if you don't know exactly what you're doing. Now, how do we go about evaluating these kinds of like meme stocks? Well, kind of don't.
Yeah.
Like they're completely devoid of fundamentals at that point. Like we keep talking about these dying business models and their name brands and things like that. Like, don't get me wrong. I love donuts. My wife loves donuts. I buy them for her every week. Krispy Kreme's awesome.
Yeah.
But like, it's not exactly an enduring business model for like the future and everything like that. Same thing with Kohl's. It's a discount Kohl's store. Like TJ Maxx does it too and things like that. But have these been companies that have really been growing over the last couple of years? Like, do their financials and fundamentals support them to keep growing?
Yeah.
It doesn't really look that way. So really, you're just trying to more or less, like I said earlier, kind of take a gamble on this, that you're going to make some quick, easy money. And I think that's what draws people in is, hey, I can make a quick buck out of this pretty fast. But, you know, better to kind of like stay away from that stuff, I would say, than try to get brought in on a hype.
Yeah. So it just sounds to me like it's coming back to this idea of timing the market. It's just timing the stock, right? So we never want to try to time the market. I've had advisors say to me, our industry is the only one where people run away from a fire sale, right? And then try to like come in at the right time to come back. And studies show again and again and again that nobody can really time the market accurately. You lose out in the end. So it just sounds like this is not a great option for investors this time. But it is a really buzzy topic, and so we wanted to make sure to touch on it. Thank you all, as always, for breaking things down and making sure we understand how to handle meme stocks. Whether this is the latest wave or a warning sign, it's a blip for investors. So it's really clear to understand the rules of engagement. And if you don't know how to handle these things or you have questions, talk to a professional. If you don't have somebody who you're working with, talk to us. We're happy to talk to you at Prime Capital Financial and help give you a second opinion on your portfolio. So thanks again, Will and Clayton, for being here, being in person, and getting real cozy today. You guys did great. Very frothy here. And so don't forget, if you are watching this and you haven't scanned the QR code, do that to get a nice paper that our investment team has put together about this topic. You can, again, scan the QR code on your screen or click the link in the show notes. But join us again. We will hopefully do more of these podcasts these videos from this particular room, get really frothy and cozy together again. But in the meantime, stay informed, stay invested, and we will be there for you through the twists and turns of the market.